Good morning, everybody, and I'm Hiran Samarasinghe, Head of Investor Relations for Sunshine Holdings. On behalf of my team, I would like to welcome each and every one of you for our second quarter results webinar for the financial year FY22. First, I'll start with some housekeeping stuff. For the usual, obviously, this webinar will be recorded and then later uploaded into our IR page so that everybody will have access to it and can go through in leisurely. We will also mute all participants for the presentation phase of the webinar, and then later open up the forum for questions. And the Q&A sessions, you will be able to unmute yourself and ask questions, or you can use the chat box and I'll moderate those questions and direct them to the relevant CEOs. So without further ado, I would like to introduce my team from this side. I have Vish Govindasamy, Group Managing Director of Sunshine Holdings, Mr. Shyam Sathasivam, Managing Director for Healthcare and Consumer Businesses, Mr. Aruna Deepthikruma, our Group CFO, Mr. T. Sayandan, who is the CEO of Medical Devices in the Healthcare Sector, Infiaz Ali, CEO for HealthGuard Pharmacy, Mr. Surit Pereira, who is CEO for Sunshine Consumer, and also finally Binesh Pananwala, who is CEO for Waterwell Plantations and Waterwell Dairy. So without further ado, I would like to hand over the floor, or rather the screen, to Vish to take things forward. Vish, over to you.
Thank you, Hiran, and thank you, ladies and gentlemen. Welcome to our quarterly update. We appreciate your time that you have taken to be here. With another quarter of great results, I have a few announcements to make before the CEOs of the individual companies speak to you in detail. As you know, we were working with IFC for funding to replace the bridge finance that we got for the acquisition of Dainty. Happy to inform you the funding from IFC did come through during this time. So that is already taken, and the bridge financing at PFCC has been settled. We also, as you are aware, announced the exit from our energy business, primarily due to the size at which we were operating at. So the hydropower and the solar power, we exited to two different investors, and all the proceeds have gone back into the group to be invested into our core business. As you are aware, the two companies, the holding company has declared an interim dividend of 50 cents per share, and Waterwell Plantations 6 rupees per share. So those are the announcements, and now I will hand over to Mr. Aruna Deepthikruma, who is our Group CFO, to give you the financial analysis. Thank you.
Thank you, Vish. Good morning, everyone. Let me take you through the Sunshine Group financials and key highlights. And happy to announce that we have had a better Q2 results than the first quarter of financial year 2021, crossing 1.4 billion group PAT in a single quarter. If you all can remember right, in the last quarter we had crossed 1 billion milestone, and this quarter 1.4 billion milestone of profit after tax. And key points to be highlighted prior to moving on to the financials. Quarterly financials of the current year included the consolidated performance of Agba Pharmaceuticals and the Dainty Confectionery, whereas those were not included in the reported financial year same period last year, except for 1 month's revenue for Dainty. And also group has divested, as the group managing director explained, divested the solar power segment during the second quarter, and also first quarter we divested the hydropower, and energy business will be fully exited from third quarter onward meaning end of second quarter onward. And also overall finance cost of the group dropped mainly due to rate advantage as well as some of the early settlement of long-term loans. And also we have had the tax advantage for the current year compared to the same period last year, rate reduction enacted at the beginning of this year. And moving on to the quarterly financials numbers, you can see from your slides presentation, group recorded 8.5 billion in revenue, which is a growth of 37% quarter on quarter. You can see a significant growth in PAT, 93% against the same period last year, which complement with the revenue growth and reduction of finance cost and some of the other expenditures. And also healthcare dominated the revenue contribution to the group, and agribusiness shows a significant growth in revenue, which is 23% during the second quarter. So moving on to the second slide, that is Hiran, first half results. Yes, this slide. Revenue recorded 15.8 billion and PAT approximately profit after tax 2.5 billion, and with a 1% growth year on year. And agribusiness had significantly contributed for the group profitability for the first half of the financial year. And moving on to the next slide, Hiran, the financial highlights. We have tabulated the financials presented earlier so that you can have a better comparison for each line item. And also in the last line, the EPS, you can see we have recorded ₹2.69 EPS, which is a 71% growth year on year. As previously informed, Sunshine Holding declared an interim dividend of 50 cents per share, which has already been disclosed at CSC. Moving on to the revenue split, you can see the next slide, please. You can see our organic growth and also from acquisition, the amount that contributed for the revenue from last year, 10.9 billion to 15.8 billion, and organically we have contributed our existing businesses 3 billion and followed by other acquisitions. So thank you very much, and Imtiaz will take us through the healthcare performance. Imtiaz, over to you.
Thank you very much, Aruna. Good morning to you, everybody. So I'm happy to announce HealthGuard also had an excellent second quarter with a growth of almost 45% for the second quarter, with a first half growth of almost 56%. So tracking well for the year. HealthGuard primarily focused on actually addressing the consumer changes that we have seen in the market. This primarily involved, the increased adoption of digital by consumers and the increased affinity towards wellness. So our main focus was therefore understanding this. How do we give a more of a mixed hybrid digital versus physical omni-channel approach to our offering? So HealthGuard primarily focused on improving its offering in terms of better digital and physical offerings to address the consumer needs. And we were able to therefore execute well on this offering that led to this good growth that we see here today. Because of this strong performance for the first quarter, our digital revenues, which was just a marginal contributor before, has now come to about 10% of our revenue as at now. Moving on to the next slide, I just want to highlight our area in terms of online businesses and some of our efforts in relation to online business. So we have really focused on being able to handle online business and embracing digital well. We have seen some impressive performance in the online platform in the first half. So 176% growth in prescription revenues we observed. We have seen a significant increase in digital marketing engagement, almost 100 times. And this has led to significant growth in online fulfillment. And we have been able to even improve our online fulfillment, where we were struggling before with being able to deliver on the orders received. We have strengthened our internal operations as well to be able to fulfill on our promise. So we are focused both on improving the funnel for the online business and being able to deliver on the online business. So overall, we are quite positive about the trend for the year as well, and we continue our efforts in improving our offering in the coming months as well. Thank you, and over to Sayandan to take you through the performance of Sunshine Healthcare Limited. Thank you.
Thank you, Infias, and good morning, ladies and gentlemen. So I'll take you through the medical devices segment of our health business. And as you can see, the market had been quite positive in terms of the opportunities that we have, because as you can see the graph, the hospital occupancy, the lab test, the OT, which the medical devices business depend on, started improving, and it had been quite positive in the market. Hence, the medical devices recorded a 13.8% growth in the second quarter. And if you take the first half, the medical devices business grew by 21.6%. So there have been a significant growth in all the principles. If you take the diagnostic space, there have been a big significant growth coming in from Siemens, the GE Diagnostics, and even if you take the surgical segment, the Johnson & Johnson portfolio, and even the 3M, the wound care segment that we operate on, had significant growth, which resulted in a positive growth for the quarter and the first half. In addition, since business depend on government as well, there was quite an improvement in debt collection and managing the inventory, which further contributed towards the efficiency in the working capital. And moving on to the pharma business of healthcare, here again, it was very similar, a significant performance of 22.5% growth in the first half had been recorded for the pharma business. And it was likely to place on record, pharmaceutical business of healthcare recorded the 1 billion sale in the month of August, which had been the highest ever performance in any given month. In addition, there have been a lot of lobbying from Sunshine Healthcare and by the industry for the price control price increase. And we are happy to note the government granted the 9% price increase for the price increase molecules, which had been 60 molecules, which resulted in 121 SKUs, where we were able to increase price, which positively impacted the profit and loss of the pharma segment. Further, the NMRA challenges continue, but our pharma business continued to perform. So ladies and gentlemen, all these put together, pharmaceutical, devices, retail business put together takes us to the achievement of the healthcare performance. If you can go to the next slide, where the healthcare recorded a growth of revenue of 42%, ending up at 4.5 billion. And if you take the first half, it had been even more significant. The healthcare segment has grown by 47.5%, taking the revenue up to 8.5 billion, a total of 53.7% contribution towards the total holdings. Even though there have been a slight contraction in EBIT due to currency depreciation in the second quarter, if you see the overall performance of EBIT for the first half stands at 760 million. And we are happy to note healthcare business had recorded a 500 million profit after tax during the first half. So with this significant performance, may I now hand over to Mr. Surit Pereira, who is the Sunshine Health Consumer CEO. Over to you, Surit.
Yeah. Good morning, everyone. So on Sunshine Consumer, quarter two was a challenging quarter for the consumer business. because one thing was from August 20th onwards, GT, the smaller outlets were inaccessible. And of course, through previous lockdowns, we have the experience. So we channeled our sales through wholesale, and also wherever possible, we serviced where it was open. We operated the GT outlets. Also, this time, in terms of the outlets being open, the trade organizations in the various provinces were also instrumental in ensuring that these outlets were closed compared to previous lockdown periods. In previous lockdown periods, with general trade being closed, modern trade sales were very good. However, this time in September, even modern trade was closed and were only operating online. So this impacted the consumer business somewhat. And the confectionery business, of course, gets a little more impacted during this kind of closure, because tea being an essential, somehow tea moves on. However, confectionery was impacted more. However, in this environment, what another thing that we did was, in the whole amalgamation, integration, more than amalgamation, integration with DNT, we had to, one of the key steps that were remaining to be done was the sales reorganization. So we did a sales reorganization because we had distributors from our tea business as well as distributors from the confectionery business. So we had to bring tea and confectionery under common distributors. So during the COVID period, where we couldn't even meet face to face through virtual means, we carried out this exercise, and it has been a very successful exercise in doing so. However, being a massive reorganization, this also impacted sales somewhat. However, the good thing is that this is now over, and now we have to focus on making use of this synergy between the two businesses to take the business forward in the future. Yeah. So when you look at tea value shares, you can see that the Sunshine Consumer Limited, is by far the market leader based on the Cantor Consumer Panel. We don't have currently a trade panel. Earlier we used to quote from Nielsen, that which covered the grocery channel only, but here this is not a trade panel. However, we get consumers based on consumers, the shares based on all channels, which includes modern trade as well, because consumers are buying from the various channels. Now here you see with the challenge we had with the sales reorganization as well as the lockdowns, market share has come down a bit in July, August. Of course, it is back to the previous levels, because in April, May, June, you will see that we have really increased our market share. This was with a heavy spend, and in July, August, because of lockdown and sales being low, we also curtailed our spend. However, you see that it is coming back now in September. So in this quarter, we expect shares to grow more. So whilst we had a short period where we had lockdowns as well as a reorganization, now is the time that we will focus on really building sales and driving the sales forward. So the post-acquisition integration, now it's almost a year since we acquired DNT, slightly over a year, and we have done very well in terms of integration. There were lots of things to do, because one thing was that DNT was a company that was run very manual processes. So we have introduced technology, Salesforce automation, And also the work environment has been improved, officers have been improved, warehousing, and also in terms of employee HR policies, a lot has been done. And the last one was the Salesforce integration. This was a massive exercise, and that is also now behind us. However, post integration, I mean, just like, you know, once you get a heart attack, that you have to, you know, the post care is very important. So the post implementation work needs to be being looked at. And then also the cultural shift has happened quite well because the teams are working together. Again, it's a sales force that needed to work together, and they have also started working together. And so that is something that we will focus on going forward. So most of the work is done, but the post implementation of the sales integration and the cultural integration is what we are focusing right now. Thank you. I'll hand you over to Binesh. Okay, sorry. So the consumer, the results, in terms of the results, you see the growth in the consumer business is mainly coming from the acquisition. Whereas the consumer business, if you take like to like, the growth was 3% based on what I said in the second quarter. However, because of the acquisition, it has been good. So then in terms of the dainty contribution to PAT, it has been about 7 million, and to revenue, it has been about 450 million. Just a minute. Yeah, 450 million has been the dainty contribution to the business. However, margins also have been impacted, especially in confectionery, because of the raw material prices are increasing, sugar has risen, and also the sales being lower than expected in quarter two. However, measures have been taken because with price increases to increase the margins in quarter three, and also with the sales reorganization behind us, we see that the confectionery business will increase in quarter three. Yeah. So that's it. I'll hand it over to Binesh.
Thank you, Surit. Good morning, ladies and gentlemen. Happy to announce excellent performance of Watawala Plantations and Watawala Dairy. As you can see, the global palm oil prices touch all-time high, which is around 42% growth since December 2020. However, the prices increase is mainly due to short supply in Malaysian palm oil, which is about 1.1 million metric tons are short in the current year. Whilst the Indonesian volumes are higher than last year. As far as the water concerned, due to the strong footing, we are above on crop by 24% over last year, and also 14% above the budget what we have taken in the current year. As far as the price is concerned, we also have got the advantage of higher prices in the Sri Lankan context. However, due to the crop increase, we have managed to keep our costs under control. Water produced 6% of the Sri Lankan oil requirement. However, in the current challenges of securing the required volumes of fertilizer and the other agrochemicals, we have anyway managed with our own fertilizer produced by Watawala Dairy, such as liquid fertilizer, compost, etc. And the first half had been excellent in terms of that by using the synergies of Watawala Dairy and Watawala Plantations. So moving on to the Watawala Dairy, you can see the price have been on the rise due to multiple factors. Since April 2020, prices have grown by 19% due to growing demand for liquid milk, shortage of milk powder in the market, above all due to a single source of farm milk, which is very high in quality, and it comes from one farm. So those are the reasons. And moving on to the next slide. As far as the performance, Vata grew on the top line by 60.3% for the first half of the year. This has been the best performance ever. However, the second quarter performance exceeded the first quarter due to crop increase and also improved prices, resulting in 73.8% growth on the top line, while maintaining a PAT growth of 127.9%. Vata ended up with all-time PAT of LKR 1.889 billion. As far as one-time super gain tax, which had come with the recent budget, Vata will not record pay based on the FY21 performance. Then in terms of the Vatavala Dairy, which has higher challenges, so Vatavala Dairy consists a herd of 1,670 herd. As of now, the second largest farm in Sri Lanka. We are second only to Ridiyagama farm as far as the herd size concerned. Out of these 774 are milking, and by end of this month, we'll be adding another 127 imported cattle, which will be importing from Australia by end of November. Dairy farm reported a PAT of LKR 14.4 million for the Q2, amidst of the challenges in securing required volumes of feed and also beating the increasing prices. This has been the challenge, and in terms of the dairy and also basically the dairy and the poultry sectors, but we are in dairy. And also the feed prices have risen by about 80% from last year. So moving to the next slide. The good news is that we launched our Pride of Lonac, which is the fresh milk delivery, home delivery. We have seen a good momentum in sales for liquid milk, especially taking into the consideration of the quality, as I mentioned before. Our target is to deliver milk to your doorstep within 12 hours from milking and guarantee the superior quality, which cannot be compared in the current market. We are also in the process of coming out with niche products in the near future, such as the good quality cheese and other products, dairy products. And also these products are now available in the modern trade. I must say that the customer feedback for these products are very good in terms of the quality. So that's a positive news in terms of the Vatavala Dairy side. So thank you very much. And I would like open for any questions later on. And I would hand over back to Hiran. Hiran, over to you. Hiran?
Thank you, Binesh, and thank you, gentlemen, for sharing your insight on this performance of Sunshine over the last quarter. So now I think we would like to open the floor for questions. So you can unmute yourself and ask a question or direct it at one of our CEOs, or you can use the chat function and I will moderate same and answer those questions. Thank you. Yeah, I think we have our first question from Mr. Jaffarji. How are you handling the Forex challenges? I think if Aruna can answer that for us.
Actually, the Forex was a challenge for us, but we manage it internally and with a close relationship with the banks. And also, we have some sort of Forex inflows as well. So we have mitigate that, the challenges through our internal source of Forex US dollars, and also healthcare being an essential service, essential item. So bank prioritize for us to have the Forex available.
Thanks, Varun. We have one for Binesh. The question is, Binesh, how is fertilizer ban impacting Vata at the moment? And what will be the future outlook for Vata in the situation where chemical fertilizer is still banned? Any thoughts?
Yeah, so I think it has been a challenge for everyone. As far as the Vata concerned, I think we are in a better footing than the others, mainly because the synergies that what we have from the Vata dairy, where we do lots of compost fertilizer and the liquid fertilizer. Currently, we are using that synergy to maintain the nutritional balance in the soil in the oil palm fields. And in the future, also that we'll be coming out with different products, and also in order to maintain higher, not really the organic side, but basically in a sustainable agriculture in getting proper fertilizer through this synergies what we have with WDL.
Thanks, Binesh. Hope Surat that answers your question. Moving on to a few questions on healthcare. I think Sham can take this from Sanjay. What's the future strategy for healthcare profitability, given that profitability is dragging downwards? Any plans to export or contract manufacturing? Sham?
Sure. Thanks, Hiran. Yeah, so broadly, I think what you will see in healthcare is the impact of the sort of merger as we sort of cycle through, the first couple of months of it. We're also comparing in terms of, what has been periods with significant swing across the last 4 to 6 quarters. Broadly, I would think subject to currency, impact versus price controlled pharmaceuticals, profitability should hold. We are growing in our medical devices sector, which is reasonably higher margins than pharma. Retail has significantly improved in terms of both volumes and margins. Pharmaceutical manufacturing, of course, has been the new area of the merger, both the existing plant and the new plant that's come on stream. We definitely think there's opportunities in the long term for export, maybe medium term for contract manufacturing into the local market, especially the private market. But the immediate opportunity will continue to be to supply the government as they switch to local sourcing across a range of products. So broadly, we think profitability will stabilize once the businesses are fully integrated and we sort of are able to see headwinds of managing price control versus the exchange. I think that's where the impact, if any, will be.
Thanks, Sham. I think that's another one for you on healthcare. From Anjula, how will the margin get impacted specifically in the pharmaceutical sector after the 3%, I think it's 2.5% imposed tax on turnover, as majority is price controlled as well?
Yeah, so definitely it's a challenge in terms of price control products to be able to bear a further hit. So, from us at the Sri Lanka Chamber of Pharma Industry, through our industry group, we will have to engage with the government in terms of how they apply this across different sectors. Pharmaceuticals are very price sensitive. It will be challenging to bear both, price control, which is not yet set to the existing exchange rate, we're still behind, and to take further taxes on turnover, as well as further down the stakeholders. We have distributors, we have retailers. So if everybody gets added on, that gets challenging from a price, perspective, and for all margins for all stakeholders at different sections.
Thanks. Shyam, there's another one, I think, on the healthcare buyback. How has the uncertainties in the government buyback agreement impacted some or the newly acquired manufacturing?
Sure, thanks. One is we've had the benefit of going into this merger, entering the pharmaceutical manufacturing sector. By the time the government had already sort of laid out its plans for not continuing committed, individual product by product buybacks as they had done in, say, 2014. They had done in 2014, they renewed again in 2019 for another couple of years, but they've been clear about what will happen going forward will be what they call national competitive bidding, which is only local manufacturers will be allowed to bid, but there will be no sort of individual 1:1 product. Of course, there will not be a large number of competing products because all of us have invested in different areas of the chain. So for example, Sunshine's investment in Lina manufacturing, which are respiratory products, there's nobody else who makes, especially the newer products, the metered dose inhalers. But there's one more, I think, local manufacturer who does the dry powder inhalers. So you will see this, I think, playing out where the government will focus on local sourcing, but it will not be tied 1:1.
Thanks, Shyam. I think let's jump on some questions on consumer for Surit. I think Sanjay and both Anjula has asked the questions, and like on profitability, I think Surit in his slides elaborated what happened in 2Q and some how we're going to correct that in 3Q. Surit, do you want to further elaborate on the profitability and how going forward we try to manage that?
Yeah. So the second quarter, as I said, was impacted by the lockdowns and also with the sales reorganization. So profit was impacted because of the revenue. Also, gross profit margin in confectionery. Now, revenue, we see that the revenue will of course increase because now the country has opened up and October has been very good. And so we are moving in the right direction in revenue. When it comes to gross profit margin, now in tea, our competitors have also increased price slightly. We are also doing so. And then in tea, there is no impact on gross profit margins whatsoever. In confectionery also, we have taken price increases and the gross profit margin will be much higher than in quarter 2. So quarter 3, we are looking forward to a good quarter in terms of revenue as well as profit.
Surit, that's another one, I think, specifically regarding the fertilizer issue and the tea industry per se, and tea being one of our big inputs. How do you see that impacting the consumer sector?
The consumer tea sector, the thing was that, okay, the main impact is on the quality of the tea somewhat and also the volume. So because of the volume, prices have risen. So that is why the price increase. On quality, there have been a little impact on buying good quality teas. So we have had some good quality teas in stock. However, we are buying good quality teas at a higher price to minimize the quality impact in the teas, in our teas.
Thanks, Surit. So if there's no other questions on the chat, I think we can wrap it up. For everybody who has participated and engaged us, thank you. And looking forward to Oh, sorry. There's one more question for Vinesh. Vinesh, if you don't mind taking this last question. Palm oil prices are expected to fall by 35 to 40% in 3Q FY22. What do you forecast for price? I think what is Vata's opinion on the 3Q prices? Tough one, but
Actually, the world market prices by now actually it should be lower. But anyway, in the third quarter, it will come down slightly, but it will be higher than what I recorded last year. So as for what are concerned, that we have already got into forward contracts, and that would not have an impact in the third quarter.
Thanks, Vinesh. There's one more from Gehan. Vata seems to be the top pick of the palm oil sector, the closest being you play with a 17% exposure to dairy. With the fertilizer, do you feel the dairy sector acts as a strategic provider of organic alternatives? As in the synergy between whatever the dairy compost output and how that input goes into the palm oil.
So I think currently what we are doing is also the same. We are using the waste from the dairy, especially the liquid as well as the solids in the oil palm fields. So these have been already done, but now what we are doing is for the future, we want to increase the nutritional value of this waste by adding certain other things. So that is being on cards.
Thanks, Vinesh. Hope that answers the question. Okay, thank you. So if there are no other further questions, I think we'll wrap it up on this session. And thank you for engaging and participating on our webinar. And hope to see all of you next quarter. Thank you and stay safe.
Thank you.